In terms of interest rates, you can see we've had those 3 rate cuts, 0.25% each. You know, I did predict 2, so again, technically got it wrong, but again, wrong on the right side is a good thing. But you know, we can see the rest of the world has been dropping them a bit more aggressively, particularly in Europe and less so in America, where again, Donald Trump's style has been to smash the Reserve Bank, chairman there, saying what he calls them too slow. Too slow is his nickname. Imagine that. How disrespectful. The president is lambasting people and throwing nicknames on them. That's absolutely outrageous in a normal society, but not in a Trump society. Totally fine. What we've got here is that the official cash rate is now 3.6. And people say, oh, is that too high? No, it's not, because the only time it's technically been lower than right now was when we had crisis of either the GFC or COVID, for goodness sake. So if you want it lower than today, which crisis would you like to have? Another pandemic, a global economic meltdown? Maybe let's have none of those. We've had enough. Let's just be happy that it's 3.6. Now there is probably room to go back down a little bit, because the key point for the Reserve Bank is to say, hey, we want inflation back in range. And they call their range 2 to 3%. So we're back in range, so theoretically we can have another rate cut. But this is again where I think the whole world is being tricked and manipulated and false stories. Inflation got super high during COVID because supply chain, etc., went all out of whack. So it went up 6, 7, 8, 9%. Now theoretically, if you've just had it because of an interruptive event such as COVID, on the other side of that event, prices should go back towards normal, which would theoretically mean deflation. It should mean for at least a year or two, you should see negative price growth, -2, -3. Not in the modern world. What they did is they locked in that 9% rise, and then they trained us through words to say, aren't you lucky that it's not rising by 9%, it's now only rising by 3 again. But what happened to the adjustment? So everybody's got that kick in. Now in Australia, if you're on a pension or an employment benefit, you're super happy about that because those pensions are linked to inflation. So everybody got a big pay rise if you're on social services. But as a society, I think we got duped. So that's just how it goes. And of course what we've got there is the main issue that we're not seeing rates go down quicker in Australia or further is because the Reserve Bank, rightly so, is genuinely concerned about the amount of spending the government is doing. And it's distorting labour markets, it's distorting the economy because the government's doing really well, largely thanks to migration, higher tax revenues, personal tax revenues. But it's spending it just as fast and still in deficits, despite the fact it's got record high revenues. And they have the audacity to say, well, where can we get more taxes from? Because we want to spend even more. No, trim it back, get efficient. That's all they need to do. If they do that, maybe we could see some rate cuts. Now, I'm going to go on prediction. I don't think we will see too many cuts because we're already at the low end of the range without a crisis. So I'm going to say we'll have 1, maybe 2 more rate cuts over the next 12 months. If the government can listen to the Reserve Bank and try to pull its head in on spending. The likelihood of that, all but 0. So prediction on interest rates, 1 to 2 cuts, likely to stay in this range.